Hi everyone, it's Grace. Welcome back to my channel. So in today's video, we're going to continue our discussion for the Sunbelt states in terms of the April 2021 to 22 year-over-year change in the inventory as well as the housing price. So these states are super hot in the US since the pandemic. And I'm going to explain a little bit why that is the case. So before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. So just a quick update on what's happening in the Fed's FOMC meeting. In May, we're seeing that 50 basis point is possible, and it's also possible for every future FOMC meeting until the Fed is able to control the inflation rate back down to the target 2%. So there's a lot of things happening in the coming months, and you should pay very close attention. And then starting from June 1st, so that's like literally tomorrow, we're going to see the Fed's balance sheet shrink by $47.5 billion per month. And that includes the Treasury securities and the mortgage-backed securities, right? So that's going to continue for 3 months. And then after that, starting in September, it's going to double up to $95 billion per month. So that's going to definitely hit a lot of the liquid asset types. And the other thing is that what I'm also seeing is that there's a lot of movement in the housing market at the same time, but I would say that that's going quite the opposite direction, especially in the Sunbelt states. And then we're actually seeing the fixed mortgage rate dropping down a little bit from 5.3%. That was the peak. Back down to 5.1%. So we're sort of like catching a break for the mortgage rate, right? But I don't think it's going to sustain. I think it's going to go back down, go back up again, and especially when another 50 basis point kicks in. So right now, the effective Fed funds rate is 0.83%, and then in the June meeting, in June 14th and 15th, it's going to increase up to 1.33% for the Fed funds rate. So the mortgage rate, either fixed or adjustable mortgage rate, is going to continue going up. So this might be a good time if you are sick of the rent, renting forever, or there's a rent increase in your current lease. I think this might be a good time to consider I'm just probably I would rather pay a lower monthly payment instead of suffering the rental increase, because I don't see it going down anytime soon. All right. So let's take a look at the maps. I actually showed you these two maps in last week's video, but in today's video, we're going to focus on the Sunbelt states, right? All the southern states here. All right. So let's go over and take a look at, just eyeball the colors really quickly. So the color legends here is two different types of colors. I want to label it very clearly. So the green color means that the housing price year-over-year change is increasing, and the darker green you see here is the higher increase of the housing price. And then if you're seeing the other end, which is red, it means that the year-over-year change in the price is decreasing. So some of these areas, right, the red areas, they're not increasing, and they're not even catching up with the inflation rate, which is really bad. So for these areas, they're not good places for investment at all. If you're putting money into it, you're literally losing the market value and the equity. So think twice about that. All right. So from what you're seeing is that for the Tennessee and the North Carolina areas, to the south of these areas, you generally see darker green. And then if you go up north to see these areas, they're generally in a lighter green tone. And that's very interesting to me. For example, if you go to Washington, D.C., well, obviously the median price is still pretty high in that points, but the year-over-year increase is only 11%. And then we're going to go to another area, which is Cincinnati, Ohio, and only increased by 16%. So a lot of these areas are actually below 20% year-over-year increase in the price. And then if we go to places like Raleigh, North Carolina, the year-over-year change is 36%. And then if we go to Nashville, Tennessee, it's 33%. And then we're going to go see like some of these very dark areas, like in Dallas, Fort Worth, Texas. It's also like 30%, right? So this basically shows that the darker green areas are where people want to move to. Like there's there's more market demand than supply in these areas. And people are moving from the central part of the US, from the West Coast, from anywhere else to these areas. And that's why they're showing much darker green. And this actually reminds me of the great migration pattern that also happened in China about, I would say, like 2 decades ago. So for those of you who are not familiar with China's map, I'm just going to quickly show you like the general pattern here. So China is like located in the the eastern part of the continent, right? So to the east, you're seeing the Pacific Ocean, and then to the west, you're seeing these like mountainous regions. And then north is also, there's a lot of deserts, places that are, generally, there's not that many economic activities compared to the eastern coast, because it's very close to other countries, to Americas, and to the rest of the world. So the general migration pattern for China 20 years ago was that a lot of people from the west, from the north, and also like these inland areas and rural areas, they're moving all to the eastern coast. So in the eastern coast, there's a lot of like urban centers. That's where a lot of the housing prices are increasing like crazy, because people just want to move to these areas because there's a lot more opportunities to make a lot of money, right? So if you're familiar with the Chinese property crisis that happened like just last year, you know that the housing price in China, especially in these like first tier areas that are crashing down. And the main reason is because there's too much debt on the balance sheet for the major Chinese property developers, such as Evergrande, Fantasia, Shimao, and all these like major companies. So that's the first reason. So I do think that the housing price cannot infinitively increase, right? It cannot just go up to the sky and stay there forever. That's not going to happen, because in order for that to happen, the debt has to increase indefinitely. And that type of balance sheet structure is not sustainable, right? And then if we go back to the US map, we're actually seeing similar migration pattern. However, what differs greatly from China and the US is that right now in the US, for all of these like market values, you're seeing a lot more equity than debt in these like really green, darker green areas, right? So it's gonna take a while for the US micro markets to reach to where China is at today. So there's a huge difference there. So another update is that the local government in Shanghai just announced that it's going to reopen from the recent lockdown. I think it started in March this year. It's going to reopen on June 1st. So that's tomorrow again. So there's a lot of like important events happening like tomorrow. And we're going to see maybe like gradually and in an organized manner that people are going to go back to the streets, and then the stores are going to reopen. It's not happening right away all of a sudden, but gradually that's going to happen. So I hope that Shanghai can go back to where it used to be. That's definitely one of the biggest hope that I have for the Chinese economy, because Shanghai is still a very important financial center in Asia. But we're going to have to see what's happening. All right, so let's go back to the map and see the inventory year-over-year change in Arizona state. So you're seeing that a lot of these areas are turning into the neutral zone color here. So it's either light yellow or light blue. So I'm seeing like a lot of inventories are picking up in these areas. That means the supply and demand are trying to balance themselves. So if it used to be a seller's market in 2021, where we see like a lot of like crazy price increase in these areas, and then in this year, I'm seeing like it's trying to balance. It's not yet a buyer's market, but it's trying to pull from the seller side to the buyer side. So it's turning neutral. For example, in Payson, the year-over-year change for the inventory increased by 4%. And then in Tucson, it's negative 2%. So that's very close to 0.0%, where the market is balancing itself, right? All right. So an interesting effect that you're seeing here is that in these areas, when you're looking at a housing price, it's still very, very dark green. So in Payson, it's increasing by 38%. So here's the trick. When you're comparing these two maps together, I actually see that there's a little bit of like the market speculation effect kicking in. That means I do not see a lot of people like generally interested into these areas. So the migration pattern, there's not enough population migration into these areas. So that's why you're seeing the inventory is picking up. So that's quite a big difference, because when you're looking at these other areas where they have dark blue and dark green at the same time, you're generally seeing people, they're interested in moving into these areas, either because there's a lot of economic activities in there, or because there's a natural price difference from where they came from to where they want to move to. All right. So for Payson, we're going to do the same thing. We're going to go into Zillow and take a look at the listings here. And we're also going to do the same type of calculation where you can figure out the timeline and also the amount of crash that's going to happen. I actually mentioned it in one of my previous videos, and I'm going to include a link here so you can definitely check that out. All right. So we're in Payson. We're seeing a lot of like, not a lot, but there's like sporadic price cuts here and there. And I would generally say that these price cuts are not small amount. Right? So I definitely see that the inventory effect and also the mortgage rate increase is happening here. Right? You're seeing like these price cuts are not just for sales purpose, but it's taking a bad toll. So let's just use this one as an example to figure out when it's going to crash and how much it's going to crash. All right. So we're going to do the same thing. First, we're going to figure out the percentage of the price cut versus the current market value. So this one is 65K divided by 419K. All right. So that's a 15% percentage. So that's really hefty, I would say. All right. So let's go back to Payson, Arizona, and we're seeing that the year-over-year change in price from last April to this April is 38%. So what we're going to do is divide 38% by 15%. And it's going to take roughly 2.5 years in order for the price to peak. So that's roughly like by the end of 2024, right? So by the end of 2024, the price is going to peak and it's going to crash down. So for those of you who are interested in buying in these areas, just to as your primary residence, you probably want to wait for a little bit because you're seeing that the inventory is picking up and the price cut is hefty. All right, let's go to another area to see. So in New Mexico, I'm also seeing like in some of these areas, the inventories are picking up quite a bit. However, I'm also seeing a lot of these areas that are still in darker blue. So that means the inventory is still decreasing. So you're not going to see like major price decrease in the near future. It's just not happening because of the market movement, right? So even though the housing price in these areas are increasing moderately, but the inventory is still decreasing. All right, so forget about these dark blue areas. It's not happening. All right, so let's go to Gallup. Right now, we're seeing that Gallup is picking up by 7% year-over-year change, even though the total number of inventory that's available on the Zillow website is not that big of a number, but there's still market movement here. All right, so in Gallup, the year-over-year change in housing price is 11%. So let's go into Gallup, New Mexico. All right, so you're immediately seeing like price cut kicking in everywhere, right? So this basically tells you that there's not enough migration pattern. There's not enough population here to support the housing market. That is the key. You need to have people, like actual people, either renters or buyers living in those areas in order for the real estate, the housing market to increase. If there's not enough people, the price is not going to increase. And then it's very sensitive to mortgage rate hike, which we're going to see in June. And then you're going to see more inventories hitting the market. All right. So we're going to do the same thing. Like for this property, you're seeing that the price cut is just getting crazy. All right. So that's $5,000 divided by 125. Okay. So that's 4% price cut. All right. So if we go to see the price increase in Gallup, it's 11%. So we're going to divide 11% by 4%, right? So that's roughly also going to take like 2.75 years. So that's the beginning of 2025. You're going to see the price peak and the housing market is going to crash by then. All right. So I think that this gives you a rough idea what's going to happen in these areas where the inventory is picking up and there's not enough population migration into these areas, right? So I do definitely see a housing crash in these markets, guys. I'm not saying that like all the Sunbelt state regions are still picking up like crazy, because that actually makes a lot of people mad, because they want to be homeowners and they want to have like wealth build up, because like real estate is a natural process for people to build up wealth. And so that's why it's important for me to share with you like these micro markets to see the market movement in these regions and how you can better navigate in these regions. So I definitely think that these two maps are powerful tools for you to understand what you should do at a certain point in time. All right. So next, we're going to move to Texas, where there's a lot of general interest. But for those of you who are not familiar with the Texas housing market, you have to understand that not all the areas in Texas are hot. So you're seeing like very sporadic increase in these areas, and then let's pull up the March map side by side so you can see what I mean. So just by the size, I think that like Texas is the biggest states in the Sunbelt states. So it's very location specific. All right. So on the right side, it's the March data, and on the left side is the April data. So you can definitely see from like these two. Let me just move up here so that my screen doesn't block the view. All right. So by comparing it side by side, you can see that the inventory, the yellow color is getting a little bit lighter than in March. All right, in some of the areas, but in other areas, it's actually getting a little bit darker. For example, in Saint Angelo, the inventory is picking up by 15% year-over-year change, and then that's in April, and then in March you're seeing -4%. So that's a huge difference. You can see that these areas are, the inventories are gonna hit the market, like I would say more so in June and forward. And then one of the areas that I did a quick calculation in one of my previous videos is Vernon, Texas. And then the inventory pickup is getting a little bit milder, but you can still see that the inventory is picking up. All right. So let's go into one of these areas where you can see a big difference and do the same type of calculation. So this is Saint Angelo in Texas. So let's go to the year-over-year change for the housing price. In Saint Angelo is 12%. So already you're seeing that the increasing housing price is slowing down quite a bit. All right, so now we're in Saint Angelo, and let's just go through the listing very quickly to see if there's like price cuts. This one is 2,000 price cut. Then there's not a lot of price cuts in this region. This one is a little bit hefty. It's $5,000 price cut. And this one is 5,100, 1,000. So there's not a lot of like price cuts in this area. So what makes this chart especially important is that when you compare these numbers and you actually go into these markets, you can see a different type of market movement. So even though the inventory is like picking up, right, by 15%, however, we do see that more buyers are interested in buying into these markets. So they're still in migration. There's still like population interest into these markets. So I don't see the housing price peak anytime soon. It's probably still going to go up quite a bit, even though the increase itself is moderate. All right. So another interesting thing that I want to share with you is that when I compare the March to the April data for the areas that people are generally interested from, they're moving from the other parts of the states into these markets in Texas, I do see a little bit of like subtle but important movement in the inventory pickup. For example, in Houston, in March, we're seeing the inventory is decreasing by 28%. And then in April, we're seeing is decreasing by 26%. So that tiny little movement is telling you that even though inventory is still low, right, there's not enough inventories available for people to buy, but it's getting milder. So this month by month subtle difference can tell you that the mortgage rate still has quite an impact on it. For example, if we go to Dallas, in March, it's decreasing by 25%, and then in April, it's decreasing by 28%. So that means there is more population moving into Dallas than into Houston. So I do think that these tiny little market movement can tell you the direction of whether the housing price is peaking, how long it's going to last, and then, those type of situations. All right, so let's take a look at Austin. In March, the inventory is decreasing by 12%, and then in April, it's decreasing by 9%. So it's getting milder by 3%, even though it's very small, but you can tell that the inventory decrease is not as bad. And that's definitely an effect of the mortgage rate. All right. And in San Antonio, we're also seeing similar pattern as Austin, right? All right. So let's go ahead and take a look at the housing price in these areas. So they're all blue and they're all green, that's for sure. And in Houston, in March, the year-over-year change in price is 21%, and then in April is 23%. So it's still increasing quite a bit. Right. In Dallas, it used to be 29%, and then it's 30%. Right. So there's slightly increase in the housing price. For Austin, it used to be 43%, and now it's becoming 38%. So by comparing it, you can tell that the Austin market is slowing down quite a bit, because there's a lot of market speculation in these areas. It's decreasing too fast. So, and in San Antonio, it's actually pretty much the same. So definitely check out these housing price to see why it's happening this way, and you're seeing that some of these markets are more speculative than the others. So if you don't know the difference between market speculation and inflexible demand coming from population, there is a huge difference there. If it's just investors, investors need to have a lot of renters in an area in order for a greater return. If it's only investors and not enough renters in these areas, you're going to see the housing price peaking very soon and crashing down very soon as well. But in other areas where you're having a lot of investors as well as renters and buyers, it's going to continue going up. So that's the difference between pure market speculation and inflexible demand. So next, we're going to move to Louisiana. You can definitely tell that the price increase is slowing down quite a bit, right? The increase is just not that great in these areas. The majority of the areas in Louisiana are in the red tone, and they're not even catching up to inflation. And that's a telling sign that the balance sheet structure in the market value of these properties, people actually take on a lot of mortgage in order to buy in these areas. That's why you're seeing that in these areas, the housing price is not catching up to inflation. When we go to the inventory map here, we're seeing some of these areas, for example, in Mississippi, there's also a lot of areas where the inventory is picking up quite a bit. All right, next we're going to move to the southeastern part of the states, where there's a lot of inflexible demand from population. People are coming from everywhere into these areas because of the natural environments, because of the price difference. So if there's a natural price difference, people are going to want to move to an area where it's super expensive, and they're not able to buy a very spacious property with a lot of money. So they're bringing that cash or equity into these markets. All right. So from the map here, we can see that the inventory decrease is extreme, especially in Winston-Salem, North Carolina area. It's decreasing by 71%. So that's like insane. And the same thing is happening in Greensboro, North Carolina as well. The inventory is just going down insane. And then if we go to the housing price, we're also seeing that the year-over-year change in price is still increasing. So in these areas, they're acting exactly like the same as 2021. I know that sounds like really, really crazy, but that's what's happening in the market right now, guys. Don't expect these areas to crash anytime soon, because people are interested in these areas for one reason or another. I definitely see like there's going to be a battle between individual homeowners and institutional investors in these areas. For some reason, people just want to move to these areas, and there's no explanation for that. But you need to understand that population is the driving force for housing market. If there's no people, housing price is not going to increase. It's just that simple. All right. So I'm also seeing like similar things happening in a lot of these markets in Tennessee, and also in Georgia, South Carolina, Florida. Like these states are generally the natural environment is much better because there's a lot of like shaded areas, and then the natural environment is also good. But most importantly, the prices in these areas are just incomparable compared to California, to New York, to Boston, to these very, very overpriced first tier cities. There's just no comparison. That's why a lot of people are putting all cash into buying the properties in these areas. So I do think that like in these areas where it's blue, it's dark blue, so the inventory is decreasing like crazy, and the housing price is also increasing like crazy in these areas. They're probably crash proof. But we're going to have to see like what the policy goes. First, we're going to look at the monetary policy, and the second, we're going to have to look at the fiscal policy. So if these two policies are getting super aggressive, say the mortgage rate increased by like 5% overnight, right? Then we're gonna have to see housing crash, like catastrophic in these areas. Other than that, guys, you're not gonna see the housing crash at all, right? So, like, I just want to point out some of these really darker areas. For example, in Atlanta, Georgia, it's increasing by 30%. The housing price is just getting crazy. There's a lot of institutional investors here. The rent is also increasing in these areas. Another interesting that I want to point out is that some of these coastal areas, the inventories are also decreasing, which is very, very similar to the east coast of China, where there's a lot of economic activities, there's international trades. It's people want better life and they want to make a lot of money. That's why people move to these areas. For example, in Myrtle Beach, South Carolina, that's a huge destination where it's getting increasingly popular. The inventory is decreasing by 53%, so that's insane. And in Georgetown, similar things is happening. And in some of these areas, for example, in Savannah, Georgia, Hinesville, Brunswick, all these areas, the inventories are just decreasing because there's genuine interest for people to move to these areas. And then obviously for Florida, a lot of these areas are also seeing similar patterns as South Carolina and Georgia. All right. So let's just compare the housing price increase as well. So you're seeing the housing price increase by 34% in Myrtle Beach, 26% in Georgetown. Like some of these like beach areas are very, very popular, even though like climate change is getting worse, right? I see a lot of you know, why is the beach area or the southeastern part of the area where, you know, the sea level is rising very quickly, and then the climate changes quickly. Why is the housing price still increasing? It just doesn't make any sense. But that's what it is. That's the real market movement. There's no explanation for it, but it is what it is. All right. So in general, in Florida, we're seeing a lot of these areas are still in the blue tone. But there's a few areas where the inventory is picking up. And then when we go to this map here, we can see that the housing price is increasing insane as well, especially in this region where like in 2022, there's a lot more people interested in these areas than before. For example, in Fort Myers, in Naples, the housing price is increasing like insane. All right. So the last thing that I want to do is to just point out some of these areas where the inventory is acting the opposite. So it's increasing, right? Just to give you a little bit of analysis of the micro market movement here. So in Greenwood, South Carolina, the inventory is picking up by 46%. And then when we go to see the housing price increase, it's increasing by 18%. All right, so let's go ahead and do the same thing. So we're now in Greenwood, South Carolina. All right, we're seeing price cut. We're seeing price cut here and there, and compared to the market price, it's actually a big price cut. And then you can clearly tell that like these market value of the properties compare like to how many bedrooms and bathrooms, compared to, for example, like a property in San Francisco, in New York, in Boston, in Seattle. Like there's just no comparison, especially when you're looking at the natural environment. And also a lot more people want to do remote work. When you combine these elements together, you can see a clear difference. There's just no brainer when you're comparing these two things side by side, right? So, but in Greenwood, South Carolina, we're seeing that the mortgage rate increase is taking a toll in these inventory increase and also the price cut, right? So that's one area, and then we're seeing another darker area at Somerville, Georgia. We're also seeing Jessup. I hope I pronounced it correctly, in Georgia. All right. All right, so I'm not gonna do all the calculations here because that will make this video like super long, and I want to keep it as short as possible. And I also want to do more like live stream videos. So stay tuned for that as well. And then this is pretty much for today's video of the analysis of the Sunbelt states, whether it's crash proof, whether the inventory is increasing or is decreasing, and how does it relate to the housing price. I would say that in general, some of the micro markets where there's genuine interest for population to move to, there's a migration pattern into these areas, the housing price will continue to grow even if we enter into a dangerous zone for the recession. I do see that like these micro markets are acting like the fortress. They're holding the value there. All right. And then there are also markets where the inventory is picking up like crazy. We're going to see more dangerous movements in these markets. There's not enough population there, so we are seeing faster crash hitting the housing price, right? So pay attention to these. I would say it's kind of random where people want to move to. They do their research and they find out where they want to move to, and they find out where they want to buy a property. It's kind of random. So it's shown in this map so you can see where people want to move to. That genuine interest is gonna be the driving force for turning that real estate market into a fortress. All right. So this is pretty much today's video, and I hope you find it useful. These two maps are already in my Tableau profile, so definitely go ahead and check them out. And then in the next video, I'm going to post a very interesting topic. I'm not going to say what it is now, but definitely stay tuned. And thank you very much for watching, and I'll see you on the next one.